Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, October the 30th, All Hell's Night. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Not a whole lot today. Like I said, it's going to be more later on in the week for the economic data here in the United States, but we did get a little bit of GDP numbers coming out of European region. We got the French flash GDP. Flash is one of their more important economic data points. GDP came in at 0.4%, and then for the German preliminary CPI, which is Consumer Price Index, came in at 0.2%, expected to be 0.1%. French consumer spending a negative 1.7%, expected to be a negative 0.4%, and they revised last month's number up slightly from 0.8% to 1.1%, so not enough to make up for the revision that we saw, or not enough in the revision to make up for the headline number we saw there. And then Spanish flash CPI, Consumer Price Index, came in line with expectations at 2.3%, and Italian preliminary GDP came in unchanged, expected to be an increase of 0.2%, and we got preliminary flash GDP out of the European region coming in at 0.2%, expected to be 0.4%, and revised last month's number up slightly to 0.4% from 0.3%. So again, not enough to make up for the headline number there. Then moving on to the United States, we got our, it's not really that important actually, it's the S&P Composite Index 20-day HPI. I don't even know what the heck that is. We're not even going to talk about that one. I thought there was another United States headline number. I don't see it right now. All right, so that's about it for the economic data. On to crude oil inventories. Again, right there where we talked about, it's getting comfortable right at this level, right at the mid, let's call it six handles, $6,500 to $60 to $70, I'd say, is going to be the sweet spot. You can see right now the point of control is lining up right there at 67.5. So somewhere right in the range 65 to 70 is that sweet spot where the point of control should really settle this market down. And then we go on to gold futures. Gold futures, we know, have been climbing based on the equities sell-off. It's a flight to safety. Today we're starting to see a little bit of weakness. I couldn't really say it's weakness necessarily, but we can see that the gold futures are in negative territory, albeit above that 1200 area that we've been talking so much about as the psychological level for the bulls to try and maintain. And then the bonds trading 139 even right now, just slightly off by about 11 ticks on the day. Again, I think that the Fed is going to start signaling that they are going to pause, or at least should signal that they're going to pause with the economic data that we've been getting out. It's not robust by any means. The market or the overall economy is doing well, but it's not robust by any means. We're just kind of trudging along, which is good. It avoids those busts, those bubbles and busts. Then we've got the Dow Jones moving up by about 360 points near the highs of the day, but climbing right back to where that point of control is. That's going to be a place where the markets migrate to, and we can see the E-mini S&Ps trying to drive above the Fibonacci levels and back into that zone. This zone between these two Fibonacci levels is going to be where I would say is the sweet spot. It's a little bit bigger than just where the point of control is. It's a nice big swath or whatever, up about 53 points right now. E-mini S&Ps climbing back into that zone also where we see the point of control, where the most time and volume has been spent. That's where it's going to have its comfort zone. Remember, when the most amount of people have bought and sold at the same price, it has a tendency to calm people. When you are overextended on the negative side, if the trade's gone against you, you have a tendency to really want to panic out. Vice versa, if you are long on the upside, you want to get out. So anytime we get to those extremes, we start seeing the markets get a little bit volatile and want to migrate back as people try to drive the market right back to where they originally had purchased it. And that's kind of what happens there. Now we can look at the E-mini S&Ps on the daily chart. This is a 30-minute breakdown. Each blue area is a daily chart, and you can see just not a whole lot of really discernible direction today, and or this whole last week and a half for the most part, we could say, at least the last week, there's just not been a real discernible direction. It's the market's trying to create a discernible direction. We just have to battle through all of this noise, if you will, right around this area before it's going to be who gives up first when you're around the point of control. All right, let's talk about a few things that I've done. Adobe was a trade that I had put on quite a while ago. And if you guys remember, I took advantage of some high implied volatility. Didn't really get the volatility to come out like I would expect. But as you can see, I got the directionality right because I went in and sold some calls in there. And those worked out quite nicely. And what I did was I sold the 180 calls in there. I'm not sure why I'm not seeing this. So I sold the Adobe 280 calls in there, and I originally sold those for 79 cents and bought those back for 35 cents this morning. So a little bit better than 50% of my max profit on that trade. As a matter of fact, I'm pretty sure I sold those for closer to $1, but I can't check for some reason why my history is not showing up right now on Adobe, and we're not going to get it. All right, so Adobe covered that trade for a profit, and then on to Under Armour. This is a trade that I did for the earnings, and if you guys remember, I usually go out to that 16 delta, and this was one that did not stay within the market maker move prediction, and so I went in there for this number and did the November weekly, sold the 18.5 calls in there, originally for 35 cents. Obviously, those 18.5 calls are in the money, so immediately this morning I got defensive and tried to stay mechanical, went into the November monthlies and sold the 19 puts in there for 55 cents. So I've collected close to 90 cents on those trades. That covers the gap there between the 8.5s and the 19s. If the market were to come back down, would hope it land right in between there. I'd be able to collect both premiums. Or actually, if I land right in between there, I'm going to lose on both of those, now that I think about it. But with all the collection, it should be fine. So I'm looking for that to come off. I'm going to ride out those short calls a little bit longer. We might get a little bit of a pullback tomorrow, and that's what I'm looking for there. So trying to stay mechanical, adding a little bit more credit to my overall Under Armour trade. You can see there's still some volatility in there that we would expect to come out throughout the day. So that's why I'm in that trade. And then we have MasterCard. MasterCard played this to the downside, played both of them. I tweeted both of these out yesterday that I was selling calls in both MasterCard and Under Armour. And in MasterCard, I did the November 205 calls in there for 79 cents. Bought those back for 9 cents. So nice winner on that one. It's really making up for about half of the losses I'm seeing in Under Armour. So that's a good trade there. I'm going to play that one out for a little bit. Played that one out a little bit longer this morning as the market was coming off, trying to squeeze out a little bit more of a credit there. And in that Adobe trade, just to be clear, since I said 79 cents, and that was actually the MasterCard that was stuck in my head, I sold those Adobe 8.5 calls for 82 cents, bought them back for 37, so better than 50% of my max profit on that. All right, and that's about it. I'm going to be looking at some other earnings trades later on today for earnings that are going to be coming out. Yum Brands, Hess Energy, Facebook, 3M are just the ones that are off the top of my head that are top of mind that I'm going to be looking at for today's earnings. So follow me on Twitter. Make sure you check that out because I'll be tweeting those out, what I'm doing, if I do anything. And that's about it. Wednesday is not going to be a webinar, but Thursday we have one. So check that one out. Go to protraderstrategies.com and sign up for that. And if you can't take that, take it easy.